According to Bloomberg News, the Reserve Bank of Australia is set for one last outsized rate hike before Governor Philip Lowe slows tightening. At 11:30 Eastern Time tonight, the Reserve Bank of Australia is expected to release a report raising interest rates by 50 basis points up to 2.85%. Australia's central bank is trying to tame inflation without choking off economic growth, bringing economists and traders together and expecting just one more outsized interest rate increase at Tuesday's policy meeting. Most economists surveyed by Bloomberg News see a fifth straight half percentage point hike by the Reserve Bank on October 4th to take the cash rate up to 2.85%. Before opting for smaller rate hikes ahead. Money markets have a similar base case, and that's the latest take on recent signals from Governor Philip Lowe that is in a keen downshift to quarter point moves at some point. About 60% of the mortgage book in Australia is on variable rates, meaning policy transmission is much more potent than in the US, where home loans are typically fixed for 30 years. At the same time, the Federal Reserve's rapid-fire rate hikes have sent the dollar soaring and other countries' currencies tumbling. Australia has fallen 5% in the past 3 weeks alone and is trading around 65 US cents. Overnight indexes swapped imply a peak in the Reserve Bank of Australia's cash rate at 4.1% by April 2023. Economists reckon that the Reserve Bank will end its tightening campaign around 3.35%, compared with the 4.2% for the Fed and the 3.75% for New Zealand and Canada. So even if the Reserve Bank delivers a half-point increase this week, its accompanying statement is likely to sound dovish compared to the Fed and Reserve Bank of New Zealand. Now let's take a look and see what the Edgefinder has to say about the Australian dollar pairs. Looking at the score chart summary first, we can see that Aussie New Zealand and Aussie CAD sit among the top of the Australian dollar pairs with neutral buy biases. Scrolling down, we'll see Aussie US with a sell bias and a score of -4. Let's take a deeper look inside of the Aussie US pair. Comparing the Australian dollar to the US dollar, we can see that we have an overall sell bias with a score of -4. COT data comes out with a score of -2. And we can find those numbers over here, with the US dollar going 73.77% long and the Australian dollar 34.62% long. Retail is also on the long side, 74% long and 26% short over here, giving us a score of -1. We see our trend reading sits at -2, which means that this market is still a sell respectively, and GDP, inflation, and unemployment are in the positive with scores of +1, while interest rates sit at -1. We can see that the current Australian dollar interest rate sits at 2.35%, but we expect that to be raised to 2.85% by tomorrow. Finally, let's see what our head analyst at A1 Trading, Eivind, had to say about the Australian dollar pairs.
Eivind, another one that I want to ask you about, and this is the big question of the day. We have interest rates with Australia. We have some decisions coming out about that. I don't know if you had any thoughts about that, and if you have any thoughts on maybe AUD USD or AUD JPY, any of the Aussie pairs that you're interested in right now.
Well, we are expecting them to rise 50 basis points. At least that's what I do. And are they going to do it? Are they not going to do it? Well, that's all going to be the question. But so it's tomorrow morning for me though. But yeah, so that's kind of my expectation. They still have too high inflation. I can't remember at the moment how high they have it, and there we are, 6.1, still too high. So they still need to raise interest rates. Still at double the rate of normal. Not as aggressive as USA. They don't have as aggressive inflation as USA either, but 50 seems okay.
Okay, fair enough. And so when you look at, if you want to pull up some charts on the Aussie pairs, just for anybody who is, watching them going into the news release, what are your thoughts on the Aussie crosses or perhaps the New Zealand crosses as well?
Well, I tried to buy it last week. That went good on me. Nice. So I lost amazing amount of money. Sorry, that was New Zealand. Sorry, that is Aussie. I lost $17.
What?
So
okay. Not bad. We could deal with that. We can recover.
Nah, it was just it wasn't a joke, but I was like, hey, this might be a higher high. I'm like, hey, cool, I can take it, but I haven't called the loss yet. But I am still buying Aussie yen. That one, that's only the yen. What I think about Aussie dollar, I think we're still going to rise.
Okay.
Sorry, fall. Sorry.
Okay.
But I think we have to rise first. Not that I see a double bottom. I just like us to have a bit of maybe up to 66, 67 area somewhere here before falling. Just to get a bit better discount. So that's kind of because of dollar strength more than anything else. And when dollar is strong, it has been proven time and again that Aussie and New Zealand is the losing part where money comes from.
Fair enough. No, that makes sense. So with the decision coming out later from the RBA, let's say that we do get some, we get rates to come out as expected, which is very, very likely, and we see a bit of a rise off that for a week or so. So you're saying at that point you potentially could look for opportunities to sell amidst all the overall uptrend on the dollar, the strength there. Is that kind of what you're thinking?
So, dollar at the moment is still very much a bullish uptrend. I just wanted to come down to 110, 109, 108, also somewhere lower so we can get it back up again. So, yeah, that's kind of my... Well, you are sometimes wanting deeper pullbacks than I want.
Yeah.
So I'm just going for a more shallow one, but yeah.
Yeah, I mean, I usually so if I was to look at the Aussie dollar just in reference to this, I'd probably take 2 attempts. I think maybe if I'm being more aggressive, I pretty close to the 38.2, and then perhaps a little bit more of a deep retracement at the 61.8.